We'll now continue with part B of this topic 4 lecture. So now we are going to address learning objective 4, and that is to explain how an enterprise fund is distinguished from an ISF and when an enterprise fund is required. So under GASB standards, a government must report certain activities in an enterprise fund if any of the 3 criteria are met. So the first one is that the activity is financed with debt that is secured solely by a pledge of the revenues from fees and charges of that activity. Second criteria, the laws or regulations require that the activity's costs of providing services, including capital costs, must be recovered with fees and charges rather than from taxes or similar revenues. And third criteria, when the pricing policies are designed to recover the costs of the activity, including the capital costs. So let's look at enterprise funds. Enterprise funds, as what we mentioned earlier, use the accrual basis of accounting, and it includes all assets used in the activity as well as any long-term debt to be serviced by the fund. The governmental business type activities generally have investor-owned counterparts in this enterprise fund. This can be used to take advantage of the accounting structures developed in the private sector or in the for-profit entities. Now, public utilities are the most common example of enterprise funds. Of course, in big enough government bodies, they might also operate airports. So that's another common enterprise fund as well. In this illustrative example that we will be looking at, we will be focusing on water utility fund. So a water utility fund is used as the illustrative example for financial reporting for enterprise fund. Water utility funds are subject to regulations by the National Association of Regulatory Utility Commissioners, NARUC, and the Federal Energy Regulations Commission, FERC, in the United States. In part, because of this regulation, there are some unique terminology that are used in accounting and financial reporting for utilities. Some of these utility terminology are provided here. So the first two that we'll be using are accrued utilities revenues and restricted assets. So accrued utilities revenue represents the unbilled revenue as a result of the cycle billing. On the other hand, restricted assets are cash restricted for return, for customer deposits, or it could be investments restricted for the retirement of bonds. When we're talking about restricted assets, so as the name suggests, these assets are restricted only for that specific purpose that has been indicated. The next two terminologies we'll look at are source of supply plant and customer advances for construction. So source of supply may be land and land rights or structures, improvements, collecting and impounding reservoirs, lakes, river, and other intakes. For example, wells, springs, infiltration galleries, tunnels, as well as supply mains and other items. So these are the main sources of the water that this fund will be referring to. Customer advances for construction are advances received from customers to complete the construction requested by customers. So you will see these terms being used in accounting for water utility fund. The last two that we will be using are liabilities payable from restricted assets and long-term liabilities. So liabilities payable from restricted assets could be customer deposits for service and the current portion of revenue bonds payable. Finally, long-term liabilities are revenue bonds that are secured by a portion of the utilities revenue and also general obligation bonds secured by the government's full faith and credit. All right, we'll be using these utility terminologies in some example transactions that we'll look at. All right, learning objective 5. Here we will look at the preparation of journal entries and the financial statements for an enterprise fund. So let's start by making an assumption that the entire December 31st, 2019, the Town of Brighton Water Utility Fund revenues accrual has been credited to the sales of water. That is the revenue account. Entry 1 would be made on the 1st of January 2020 to reverse the accrual entry made in the previous year. So the first entry would be to debit sales of water, 14,800, the figure is provided, and credit accrued utility revenues, 14,800. Now, recall that the water utility fund loaned money to the supplies fund for $130,000, and this is a long-term loan. We've seen this in the illustrative case for supplies fund. Remember, that was supposed to be paid in 20 equal annual installments, right? So the journal entry in the water utility fund would be to debit inter-fund loan to supplies fund, non-current, the 123,500, and the current portion, the 1/20th of 130,000, will also be debited to inter-fund loan to supplies fund, current, 6,500. And the credit would be to cash, 130,000, because obviously the cash of water utility fund reduced by 130,000 because it's been transferred as an inter-fund loan to the supplies fund. When the utility customers are billed during the year, the appropriate revenue accounts are credited. Now, let's assume that during 2020, the total bills for non-government customers amounted to 696,000, and the bills to the Town of Brighton General Fund amounted to 30,000. And all revenue was from the sale of water. So we will be journalizing this by debiting customer accounts receivable for 696,000. This represents the sale of water to non-government customers, and we will also debit due from general fund for 30,000. This represents the amount that the water utility fund sold to the general fund. And of course, the credit is to sales of water, the total amount of 726,000. So the total of our sales from our non-government customers and also the Town of Brighton. If collections on receivables from non-government water customers total 680,000, then we will debit cash for 680,000 and credit customers' accounts receivable for 680,000. Now, suppose that materials and supplies in the amount of 138,000 were purchased during the year by the water utility fund. We'll record the liability as follows: debit materials and supplies 138,000. It increases our asset of materials and supplies, but it also increased the accounts payable for 138,000. So we will credit accounts payable to increase our liability. When materials and supplies chargeable to the accounts were issued during the year, then our journal entry would be to credit the materials and supplies for the full amount, 142,000 in this example transaction. All right. So we will credit materials and supplies because we are reducing our assets of materials and supplies, 142,000. And what do we debit? We will debit the corresponding expense accounts. So it looks like out of this 142,000 that we have charged, all right, in terms of materials and supplies, 18,000 pertains to source of supply expenses. 21,000 is for pumping expenses. Water treatment expenses, 24,000. Transmission and distribution expenses, 13,000. And construction work in progress, 66,000. So the total amount chargeable to those specific expense accounts is 142,000. All right. Payrolls for the year that were chargeable to the accounts will be shown in entry number 7. Now, it is assumed in entry 7 that the employer's share of Social Security taxes is charged to the same accounts as the employer's gross earnings. All right? And we are also told that checks have been issued for net earnings, so we pay them by cash. So the debit to this would be again for the expenses pertaining to the expenses affected by the payroll. All right. Now, in this case, so these figures would have been given. So the amount for sources of supply expenses, 8,200, pumping expenses, 15,700, water treatment expenses, so this must be the people, the employees that are working with the water treatment, 17,500, transmission and distribution expenses, 76,250, customer accounts expenses, so this would be the employees that work with the customer accounts. Sales expenses amounted to 17,250, administrative and general expenses 83,150, and construction work in progress amounted to 30,400. So we debit all those amounts, and our credit would be to supposedly credit cash. If there are no taxes accrued or tax collections payable, the full amount of that would have been credited to cash. All right. The tax collections payable is the account used to report the amount of taxes collected through payroll deductions. Taxes accrued, on the other hand, is the account used to report the liability for taxes that are the expense of the utility, such as employer share of Social Security taxes. So this tax collections payable is reporting the amount of taxes collected through the payroll deductions. So these were deducted, the tax deducted from the employees' salaries or payroll. All right. And taxes accrued is the account used to report the liability for taxes that are the expense of the utility. All right, the employee share of Social Security taxes. Now, bond interest in the amount of 105,000 was paid, and the bonds were issued to finance the acquisition of utility plant assets, and the amortization of debt discount is stated here amounted to $530. So how do we enter this? We will be debiting interest on long-term debt, and that's for the amount of the total of the bond interest and the debt amortization discount. So 105,530. We will then credit unamortized discount of 530 and credit cash for 105,000 because we paid cash for that amount. Bond interest in the amount of 12,900 was properly capitalized as part of construction work in progress during the year. So the town of Brighton is stated here does not impute interest on its own resources during construction. So journal entry for this in the fund account would be to debit construction work in progress 12,900 and credit interest on long-term debt 12,900. Now the construction projects on which cost totaled 220,000 were completed and the assets placed in service were recorded. So this time, because we've been debiting construction work in progress whilst it's still in progress. Now, once it's completed, we'll credit construction work in progress for the full amount. All right? So it looks like, as stated here, the construction project totaled 220,000. So we must have debited it for 220,000 before. We're now crediting that for 220,000. And what do we debit? Debit utility plant in service 220,000 because now that construction project is already in service. Now let's look at collections. Collection efforts on bills totaling 3,410 were discontinued. The customers owing the bills had paid deposits in the amount of 2,140 to the water utility. The deposits were applied to the bills and the unpaid remainder was charged to accumulated provision for uncollectible accounts. And we'll see that in entry 11A, where we have debited customers' deposits for 2,140 and debit also the accumulated provision for uncollectible accounts for the difference between 3,410 and 2,140. All right, so that's 1,270. And we credit now the customer accounts receivable of 3,410. This is the amount of receivable that is being discontinued. All right. The restricted assets cash is reduced by 2,140. This is the amount of the decrease in customer deposits that we're recording in entry 11B. Because cash may be restricted for a number of reasons, such as customer deposits or debt, or government will maintain internal information regarding the nature of restrictions placed on cash. But here in entry 11B, as you can see, we debited cash 2,140 and then we credited cash restricted 2,140, thereby unrestricting the customer's deposit. Now, entry 12A records customers' deposits amounting to 1,320 that were refunded by check to customers discontinuing service. So it is likely that some customers might want to discontinue their service and so they'll get back their deposits. So how do we enter that? We'll just debit customer deposits 1,320 to reduce that liability and credit cash restricted for 1,320 because customers deposit, even though it's in cash, it's actually restricted for the repayment of or reimbursement of customer deposits. So we are crediting cash restricted here. All right. Entry 12B records deposits totaling 2,525 received from new customers. So when we receive or when we have new customers, they also need to pay deposits. So the cash we collected from new customers will be debited to cash restricted 2,525 and will credit customer deposits 2,525. This time, we're going to record customers' advances for construction with a total of 21,000, and it's being reclassified. 14,000 were applied to customers' water bills, and the remainder of the advances was transferred to capital contributions from customers. So this is in accordance with designated customer agreements and the NARUC recommendations. All right, so the entry would be to debit customer advances for construction, 21,000, and credit customer accounts receivable for 14,000, also credit the capital contributions from customers for the remaining balance, 7,000. Payment. All right, so payments of accounts payable. How do we record this? If we are to pay accounts payable for materials and supplies used in operations, and this is amounting to 67,200, and we're also paying accounts payable for materials used in construction totaling 66,000. Payment of taxes accrued amount to 13,500, and the payment of tax collections payable amounting to 50,000 will also be paid. So we are on a paying spree this time. How do we record all of this? So the total of 67,200 and 66,000, that's 133,200, will be a debit to accounts payable, because that is all part of our liability called accounts payable. So we'll reduce that because we're paying it, so we'll debit accounts payable. And we are also paying taxes accrued amounting to 13,500. So taxes accrued will also be debited for that amount, 13,500, as well as tax collections payable amounting to 50,000. So we'll also debit tax collections payable 50,000, and credit cash for the total of these three figures. So that's 196,700. Now, the Water Utility Fund agreed to pay $25,000 to the town's general fund as a payment in lieu of property taxes. So, how do we journalize that? In the Water Utility Fund, there will be a debit to payment in lieu of taxes, 25,000, and credit due to general fund, 25,000. All right. To continue, during the year, interest amounting to 44,500 in cash was received on restricted investments. The amount of 1,375 is not restricted and can be allocated to investments of customer deposit assets. So the remaining 43,125, the difference between these two, adds to the amount restricted for revenue bond repayment. So our entry would be to debit cash 1,375, the unrestricted amount, debit also cash restricted 43,125, and credit interest and dividend income for the full amount, $44,500. Now, we also need to record this in the net position because there is that restricted and unrestricted portion. So, we'll debit net position unrestricted for 43,125 and credit net position restricted for debt service for 43,125. So, this cash that has been restricted should also be reflected in the net position that's restricted for debt service. Okay, that's what we're doing in entry 16B. Now, at year end, entry 17 will record the depreciation expense, the provision for uncollectible accounts, and the unbilled customer accounts receivable. This is in accordance with the regulatory terminology that we're using uncollectible accounts instead of bad debts as required in FASB, or provision for bad debts as required in GASB. All right. So we will be debiting uncollectible accounts for that amount added to accumulated provision for uncollectible accounts. So our debit would be to depreciation expense. These figures again are given. So depreciation expense 102,750. Uncollectible accounts will be debited for 3,980, and accrued utility revenues 15,920. The credit would be to the contra account. Accumulated provision for depreciation of utility plant for that amount 102,750. Credit accumulated provision for uncollectible accounts for that 3,980. And we will also be crediting the sales of water for 15,920, because this is what we're doing when we need to accrue at the end of the period, at the end of the accounting financial year. We'll need to accrue utilities revenues. All right, so we will be debiting the accrued utility revenue and crediting the revenue account, sales of water. Remember, entry number 1, the first entry that we did was to reverse this accrual. All right, so in the next year, that's the first entry you will do as well. You'll be debiting sales of water 15,920 and crediting the accrued utility revenues for the same amount. All right, now in accordance with the revenue bond indenture, $100,000 of unrestricted cash was invested in U.S. government securities for eventual retirement of revenue bonds. The net position is then restricted in an amount equal to the increase in restricted assets. So in addition, investments totaling $40,000 were made from restricted cash for eventual bond repayment. So we'll need to journalize these. In 18A, we debit investments restricted for the full amount, 100 plus 40,000, 140,000. We'll credit cash for 100,000 and credit cash restricted 40,000, because it says the investment totaling 40,000 were made from restricted cash. Okay. Also, just like what we did in entry 16B, we'll need to make some adjustments in our net position, both the restricted and unrestricted. So, net position unrestricted will be debited for 100,000, and net position restricted for debt service will be credited for 100,000. So, we are reducing our unrestricted net position and increasing our restricted net position for debt service. Now, toward the end of 2020, the Supplies Fund paid its first installment of $6,500 to the Water Utility Fund as a partial repayment of the long-term advance. So recall that Water Utility Fund made an inter-fund loan to the Supplies Fund. So now we are going to record the effect on the accounts of Water Utility Fund. So in entry 19A, because Water Utility Fund is receiving cash of 6,500, so we'll debit cash 6,500 and we'll credit inter-fund loan to Supplies Fund current, the current portion, 6,500, thereby reducing the inter-fund loan to Supplies Fund current. Now we need to reclassify another 6,500 because in the next accounting period, another 6,500 will become due. So inter-fund loan to Supplies Fund current will then be debited to reinstate another 6,500 amount of inter-fund loan that becomes current. and we will credit interfund loan to supplies fund non-current 6,500. So we are reducing our non-current interfund loan to supplies fund of 6,500. All right, now we are going to the closing entries. Just like in profit-oriented businesses, we close the nominal accounts, not the real accounts. So we don't close real accounts like assets, liabilities, and the equity account. What we are closing are the nominal accounts, the expenses, and the revenue accounts. So the main revenue is the sales of water, right? So it will have a credit balance because it's revenue. To close it, we'll need to debit it. All right, so sales of water will be debited by how much? Well, if you have a look at the journal entries that we have made, entry 3, 17, and 1 has sales of water. All right, so these are the main ones. The credits, 726,000 in entry 3 plus 15,920 in entry 17 minus the debit in entry 1 of 14,800 will give you 727,120. All right, so it has sales of water has a credit balance of 727,120. So to close it, we'll debit it. Okay. What else? Capital contributions from customers. Where did we get this from? We have recorded this in entry 13. The capital contributions from customers, $7,000. All right, so it has a credit balance. To close it, we'll need to debit it. So debit capital contributions from customers, $7,000. The next one that we'll need to close is the interest and dividend income of 44,500. Where did we get this from? From entry number 16. All right, so interest and dividend income of 44,500 has a credit balance. To close it, we'll need to debit it. So those are the debits. And what do we credit? Well, all the expense accounts will have debit balances. So to close them, we'll need to credit. All right. What are the expense accounts? So the first one is the source of supply expenses. These were recorded in entry 6, source of supply expenses, and entry 7, that one there, source of supply expenses. So the total of that 18,000 plus 8,200 is 26,200. What about the pumping expenses? Again, it's shown here in entry 6 and entry 7. So 21,000 plus 15,700 will give you 36,700. The next one is water treatment expenses. Again, it is here in entry 6 and entry 7, amounting to debit of 24,000 and 17,500. So the total of that is 41,500. Transmission and distribution expenses, again shown in entry 6 and entry 7. So we have 13,000 here for transmission and distribution, and another 76,250 here. So the total is 89,250. For customer account and expenses, this is only shown in entry 7, and that is for the full amount of 96,550. So that's easy enough to spot. Sales expenses is also just found here in entry 7, and that's for the amount of 17,250. So it has a debit balance. We'll then credit it to close it. The next one is administrative and general expenses, is also just shown in one entry, and that is in entry 7, 83,150. Interest on long-term debt is actually shown in two entries. Entry 8, which is here, 105,530, and also in entry 9, we have it for 12,900 here. So 105,530 minus 12,900. One is debit, one is credit. So the difference is 92,630. Payment in lieu of taxes is found in entry number 15, and that's for 25,000. So we will just be crediting that. It has a debit balance there, so to close, credit it. Depreciation expense is found in entry number 17 for 102,750. So we will be crediting that for that amount. Uncollectible accounts also is in entry 17 for 3,980. So it has a debit balance, so we'll credit it to close it. And the balancing figure, that means the difference between the total of your debit and the total of your credit, all right, will be 163,660, and that would be close to net position unrestricted, the balancing figure. Okay, so we have closed all the nominal accounts. What do we do next? Well, in addition, the net position, net investment in capital assets would be decreased for depreciation and amortization of the debt discount, and increased for the change in utility plant during the year. So in entry 21A, it will actually reflect the adjustment for depreciation that is shown in entry 7. All right. Also, the amortization that is shown here in entry 8. So we've got this depreciation and we've got this 530 there. And the increase to capital assets as shown here in entry 6, 7, and 9, resulting in the adjustment to net position is shown in entry 21B. All right, so let's look at entry 21A. What are we doing here? We are debiting the net position, net investment in capital assets for 103,280. And that's the total of this 102,750 plus the 530. Okay, so that's 103,280. And we are going to credit the net position unrestricted for that same amount, 103,280. In 21B, we are going to debit net position unrestricted for 109,300 and credit net position net investment in capital assets for the same amount, 109,300. So where do we get this 109,300? This is simply the total of the construction work in progress. So here in entry 6, we have it for 66,000. Construction work in progress in 7, entry 7, 30,400. And in entry 9, 12,900. So the total of that is 109,300. So after these entries, the balance of net position, net investment in capital assets is equal to the total fund capital assets less accumulated depreciation and net of capital asset related debt. Okay, so now we will be looking at the enterprise funds column in the government-wide financial statements. You have seen this earlier in part A of this lecture, and so you can see that in illustration A2-7, A2-8, and A2-9, this is the example or the extract of the statement of net position, proprietary funds, statement of revenues, expenses, and changes in fund net position, proprietary funds, and the statement of cash flows, proprietary funds. you'd notice that the business type activity enterprise funds are actually shown as well. All right. So, for example, a water utility fund will be part of this, or in one of the columns under the business type activities or enterprise funds. Okay, so that is how we will present the enterprise fund financial statement in the government-wide financial reports. All right. An enterprise fund prepares also the following financial statements: the statement of net position, which is equivalent to the balance sheet; statement of revenues, expenses, and changes in fund net position, equivalent to the income statement; and the statement of cash flows. So for the water utility fund of the town of Brighton, as you can see in illustration 7-6, we are provided an example of the statement of net position. And I just wanted to point out that, as you can see here, it's following the format of assets minus the liabilities equals the net position. And that's mainly because it is called the statement of net position rather than the traditional balance sheet. All right, this is illustration 7-7, and it shows the town of Brighton's statement of revenues, expenses, and changes in fund net position for water utility fund. And as you can see, it kind of follows the normal format where you will have the operating revenues, the sales of water that we have looked at. Then you've got the operating expenses, total operating expense. Then you've got the utility operating income, and then you deduct the non-operating income and deductions in the form of the interest and dividend revenue that we've looked at, as well as the interest on long-term debt. So we get the income before contributions and the capital contributions from customers, that's 7,000 that we've accounted for. And finally, you will get the change in net position. And if you add the total net position at the beginning of the year, you'll get the total net position as at 31st of December 2020, 2,115,760, and it should match the figure that is shown in the statement of net position, $2,115,760. Okay, now an example of a statement of cash flows for the town of Brighton's water utility fund is shown in illustration 7-8. So as you can see here, the cash flows from three main types of activities in the profit-oriented company statement of cash flows are exactly the same here. You have got cash flows from operating activities, cash flows from financing activities, and cash flows from investing activities. All right, so as you can see, the preparation of the statement of cash flows on enterprise funds are very similar to profit-oriented businesses. All right, so it's also a common practice to prepare the reconciliation of cash and cash equivalents to the statement of net position, and a reconciliation of utility operating income to net cash provided by operating activities. And that is pretty much it for topic 4 lecture. So before I end this topic 4 lecture, I'd like to once again point you to the Bible verse in 2 Kings chapter 12 verse 15, reminding us that if we deal honestly all the time, people around us will be able to trust us. So the verse said, they did not ask for an accounting from the men into whose hand they delivered the money to pay out to the workmen, for they dealt honestly. It is true what Molière, a French author, poet, and actor, once said, "It is not only what we do, but also what we do not do, for which we are accountable for." Ultimately, we are accountable to our God, not just to a certain organization or certain individual or person, but truly to God. All right, this is the end of topic 4 lecture. I will see you during our tutorial discussion. Bye for now.